Assalamualaikum warahmatullahi wabarakatuh. We from Group 4 would like to present Group Project 1. The first question is the relationship between beauty-centric Berhad and exclusive Berhad. The relationship between them is subsidiary because beauty-centric Berhad holds 80% of the control share in the exclusive Berhad. The method they are using is acquisition since they are subsidiary. The second one is the relationship between beauty-centric Berhad and a miskin Berhad. The relationship is subsidiary also because the beauty-centric Berhad holds 60% of the control in the miskin. The method they are using is acquisition to record the consolidated.
So now we'll be moving on to question 1b, which is computing the goodwill or bargain purchase of the acquisition of Exquisite Berhad and Amazskin Berhad. Before we begin, what exactly is goodwill and bargain purchase? Goodwill can be defined as the excess of purchase price against fair value of net assets. When the consideration transfer or purchase price exceeds the fair value of net assets, this results in a positive value, which we call goodwill. Goodwill is considered an intangible asset and is recorded in the financial statements as such. Meanwhile, what is bargain purchase? Bargain purchase can be considered as negative goodwill, where the fair value of net assets exceeds the purchase price instead. This results in a negative value, which we call bargain purchase, and can be an indicator that a company is in crisis, since they are forced to sell their net assets at lower than the fair value. Now that we've covered the basics, let's move on to the question, starting with Exquisite Berhad. On 1st January 2016, Bucentric BHD purchased 1.6 million shares valued at 1 ringgit 40 cents each from Exquisite Berhad. With these numbers, can you calculate the consideration transfer? Aha, I see you do know how. All we have to do is multiply the number of shares with the share price, to get to 24 million ringgit, our consideration transfer. Moving on, we also have to calculate the non-controlling interest. How do we do that? Easy, we know that the non-controlling interest holds 20% of the shares or 0.4 million shares, so we simply multiply with the share price, giving us 56 million ringgit. Now that we're done with that, let's look at the fair value of net assets for Exquisite Berhad. On 1st of January 2016, the net assets are as follows: ordinary shares 200 million ringgit, general reserves 45 million ringgit, retained profit 12 million ringgit. These figures can be obtained from the question, but for the last item, the asset revaluation reserve, we need to compare the fair value of the leasehold property and the carrying amount, which will lead to an excess of 5 million ringgit. Once we total up all the numbers, we get 262 million ringgit for the fair value. With all these figures on hand, we can now find out, is it goodwill or bargain purchase? Consideration transfer and non-controlling interest, total 280 million ringgit. Fair value of net asset at date of acquisition, 262 million ringgit. Finally, we get a positive value of 18 million, which means it's goodwill. Stop, we're not done yet. What are you forgetting? Yes, it's impairment. We have to deduct 10% impairment from the figure earlier, which will result in 16.2 million ringgit as the final figure for goodwill. We've already done one goodwill calculation, are you ready for the next one? Good. Let's look at Amazskin Berhad. On 1st of March 2018, Bucentric Berhad purchased 240 million shares from Amazskin Berhad. Where's the share price? Well, we cannot simply multiply this figure with the share price. Don't get angry. This question just needs a little figuring out. The question already states that Bucentric Berhad paid 100 million ringgit as consideration, in addition to a promise to pay consideration later on under certain circumstances. Since this promise possibly creates an obligation for the company, it becomes a liability and needs to be recorded as part of the consideration transfer. This contingent consideration is calculated by multiplying the number of shares with the agreed upon share price of 1 ringgit 35 cents, then multiplying with the present value of 0.9. Now, we simply put in the figure and we get a total of 391.6 million. For non-controlling interest, we only need to multiply the number of shares held by NCI, 160 million, with the share price of 1 ringgit 25 cents. This gives us 200 million ringgit. Oh. It looks like the calculation for the fair value is a little different too. Now, calm down, we can do this one too. So, the figures that we can take from the question are ordinary shares at 400 million ringgit and general reserves at 10 million ringgit. We also need to include the value of the brand at 2 million ringgit, since it falls under asset revaluation reserve. The retained profit at the beginning of the year, January 1, 2018 needs to be included, since the acquisition happened in March. Likewise, the current profit included in the fair value needs to be apportioned to reflect the date of acquisition. Therefore, 2/12 of the current profit of 36 million ringgit earned during the year will be included in the fair value. And that's it, we now have the fair value of all the items under net assets. This gives us a total of 487 million ringgit. So now the last question remaining is it goodwill or bargain purchase? Let's see. Consideration transfer and NCI is 591.6 million ringgit, while fair value of net assets at date of acquisition is 487 million ringgit. This gives us a positive value of 104.6 million ringgit for goodwill.
Next, we move to question 1C. First, the 56 million and 200 million should transfer to NCI column. Retained profit for Boss and Trick should be calculated with retained profit CD minus URP, inventory, ordinary, dividend payable, finance cost, which is contingent consideration, impairment goodwill, and at debenture interest received from Exquisite. To get URP inventory of 4,640,000, we must add 4,640,000. Then we get 106,720,000 and transfer to group retained profit and no portion for NCI since it is parent. The impairment goodwill must portion to group retained profit 80% and NCI 20% because the company used fair value method. For Exquisite, retained profit CD should minus with pre-acquisition URP plant, depreciation property and dividend of redeemable preference shares and add with depreciation plant. For depreciation plant, URP must times with 2, since it is 2 years. While depreciation property must times with 3, since it is 3 years. And the dividend is 6%. Then, the amount of 37,480,000 must portion to group retained profit 80% and NCI 20%. For Yema's Skin, balance CD must deduct with pre-acquisition and amortization of brand. The amount of 29,600,000 should portion to group retained profit 60% and NCI 40%. For Boss and Trick, general reserve is 30 million. Transfer to group general reserve and no portion for NCI since it is parent. For Exquisite and Yema's Skin, the general reserve and NCI is 0 because balance CD is offset with pre-acquisition. For ARR of Boss and Trick, it is 50 million and transfer to group ARR and no portion for NCI since it is parent. For Exquisite, the group ARR and NCI is 0 because balance CD is offset with pre-acquisition. for FAR610 balance CD is calculated by 2 million plus 30 million. The balance after deduct with pre-acquisition should portion to Group ARR 60% and NCI 40%. Therefore, amount of group retained profit is 154,464,000. Group general reserve is 30 million. Group ARR is 68 million and NCI is 286,976,000. Then, these amount should transfer to Statement of Financial Position under Equity.
Hello everyone, I'll explain to you question 1F. The question asks us to prepare consolidated SOFP for the year ended 2018. We start with non-current asset, which is property, plant and machinery. The formula is cost minus with accumulated depreciation, plus minus with surplus or deficit or regulation, plus minus unrealized profit, and plus minus over or under depreciation. In order to calculate the new carrying value of property, we just have to take the carrying value in the SOFP plus with ARR and minus with depreciation. Same goes to plant and machinery, we have to minus with unrealized profit and plus with over depreciation. We move to other investment and goodwill, which we only need to add all the carrying value. But for plant, we have to minus the carrying value with the amortization. Next is current asset, which is inventory. The formula to calculate inventory is cost of inventory minus with unrealized profit plus with goods in transit. Therefore, we just need to minus the unrealized profit plus goods in transit to its carrying value to get the new amount of adjusted carrying value. For is receivable, we have to minus the intercompany transaction to its carrying value. Same goes to trade receivable, where we have to minus with intercompany transaction. For bank, we have to add with cash in transit in order to get the new carrying value. Next, we move to calculate equity. For equity, we just need to simply transfer the amount that we get from SOCI and NCI schedule. So this is the amount that we need to put under the equity that we just simply take from the SOCI and NCI values. For non-current liabilities, we only need to minus the values with the portion that being held by the holding company. Last but not least is current liabilities. As well as trade receivables, trade payable also we need to minus with intercompany transaction. And for base payable, after we add all the carry value, we have to minus with intercompany transaction of 3,000 in order to get the new carrying value. For debenture interest, we need to minus the portion held by the holding company to its value. You just need to add in order to get the contingent consideration. Last but not least, we have to record the ordinary dividend being declared by the company in the consolidated statement. So this is how the financial statement will look like, and we will get the balancing figure in the debit and credit side.
Assalamualaikum warahmatullahi wabarakatuh. My name is Syahidah binti Ahmad Zakir. I will proceed with the answer for question 3A, B and C. Okay, the question 3A. Question asks for which offer should Sadun Berhad accept in order to exert significant influence over Madam Berhad. On 1st January 2015, Sadun Berhad acquired 8 million out of 10 million unit of the issued ordinary share in Madam, which makes Madam become its subsidiary, since the percentage of control is 80%. Okay, if we consider offer 1, Sadun Berhad will have to sell 2 million out of its 8 million shares in Madam to Ombak. After disposing the shares, Madam Berhad's status remain the same as Sadun's subsidiary, since the percentage of control is 60%. Okay, meanwhile for offer 2, Ombak Berhad willing to buy 5 million out of the 8 million shares from Sadun Berhad. The disposal of 50% shares change Merdang's status from subsidiary to associate as the percentage below than 50%. Therefore, Sadu Berhad should accept offer 2 in order to exert significant influence over Merdang Berhad. Okay, for question 3B, the question asks for the amount of goodwill. Okay, the consideration transferred by Sadong for the shares acquired is 12 million. Then we plus with the NCI amount, which is 20% of fair value net asset of subsidiary at the date of acquisition. The total amount of fair value net asset of subsidiary at the date of acquisition consists of 10 million ordinary shares and 3.5 million retained profit. The amount will be deducted in order to obtain goodwill amount. Okay, so the current goodwill amount is 1.2 million. Okay, after the impairment test on the goodwill, it is shown that its recoverable amount is 1 million. Therefore, the goodwill on consolidation is 1 million, since the recoverable amount given will be its new goodwill amount. Okay, for question 3C, the implication of the disposal of shares in Merdang with regard to the preparation of the consolidated financial statement for the year ended 31st December 2018. Okay, CSOPL, the statement of profit or loss will be consolidated only until the date of disposal, which is, in this case, is 1st August 2018, and any gain or loss on the disposal will be recorded in CSOPL as well. Okay, as Merdang Berhad becomes an associate, the company will have to use equity method by disclosing the shares of profit from associate in its CSOPL. The goodwill of 1 million will be written off. Okay, in the CSOFP, as the percentage of control is below 50%, the goodwill and NCI amount will be recorded as nil, since Merdang no longer is a subsidiary. The investment in subsidiary item will change to investment in associate, and the shares will be recorded at fair value on the date of disposal. The 3 million is remaining shares times with the share price per unit on 1st August 2018. Okay, the proceeds of 19.5 million from disposal of share will be recorded as receivable under asset. That's all.
Question 3D. Compute the gain and or loss on disposal share that will appear in the account of Sadong Berhad for offer 2. Okay, this is the calculation for the question 3D. The first one starts with the proceed for offer 2, which is 19.5 million, plus the fair value of the remaining share, which is 5 minus 2 million times with the 3 ringgit and 90 cent, which is the market share at that time, which is 11.7 million. Total, these two will get the figure 31.2 million, and this amount should be deducted the fair value of net asset at disposal. The calculation is in here, which is ordinary share capital 10 million plus with the retained profit brought forward 15 million, and the profit for the year 35 million minus 50 million, and times with the 7/12, which is 7 months. 7 months from the year, which is total 11.67 million, which the three figures total up and get 36.67 million, and times with the 80%, which is the contour of the controls. We'll get the 29.34 millions, and this figure should be deducted with this figure and deduct with the goodwill amount, which is amounted at that time 1 million and 31.2 million minus 29.34 million and minus 1 million will get 0.86 million, which is gain on disposal.